If you're counting on that kind of reacceleration, why wouldn't you go whole hog on cyclical and value?
Well, because what we're seeing, right, is that there's still some really good secular growth names out there that are going to be driven by the recovery as well. And in those names, whether it be a Broadcom or a Taiwan Semi, right, they have both things going for them. They have cyclical recovery, and then they also have that longer-term secular expansion. So we want to be exposed to both, in addition to having some exposure to more pure, so what we call smart cyclical stocks, whether that's a TJ Maxx, or Six Flags or stocks like that. So it's worth being in both areas.
So given the conversation we're having, your outlook for rates, for yields, as we do head into 2022 and as we do await comments again this morning on the Hill from the Fed Chairman Powell about where we go from there. And I guess just as importantly, is there a point at which a rise in rates has a net negative impact on the stocks that you're focused on?
Well, Morgan, as an economist, I can tell you that interest rates are too low. When you look at the inflation forecast, even if the Fed successfully keeps us anchored around 2% in the longer term, interest rates for the 10-year at around 1.5, simply don't match up with what inflation is doing and what real growth is doing. So we do expect interest rates to rise, and that's why we also have our clients in that third bucket, which includes names like Citigroup and Toronto Dominion, et cetera. And on the broader market, the rise in rates certainly is complicating for higher multiple stocks, which is why we tend to invest for our clients more in the growth at a reasonable price. We want to avoid those particularly high multiple stocks, or at least keep them underweight. And that's, I think, a good way to balance those inflation and interest rate risks, which clearly are ahead of us, with the opportunity for investors still to see income come off their portfolios and to see further appreciation. So whether it's a bit rocky here in the fourth quarter, that's yet to be seen. I do think it's going to be volatile. But ultimately, investors hopefully are focused on the longer term, 2, 3, 4, 5 years and longer.
All right, Joanne Feeney, appreciate your time and your insights this morning. I always like being able to have some tangible names for our viewers to check out as well. Thanks for joining us.